What's good, everyone, and welcome back to the Financial Four channel. We're on our free money glitch series number 1, talking about bottom up versus top down analysis part 2. We just finished talking about top down analysis, and now we're going to go over the bottom up analysis approach, how to apply it, and how the bottom up analysis works in an example. So grab your notebooks, buckle up, hands if you inside the right all times. Let's go, let's use money. So bottom up analysis is the opposite of the top down method, where most of the emphasis is placed on individual companies first, and it's not as connected with the economic outlook. Bottom up strategies are extremely reliant on fundamental analysis, as most of the research is carried out on individual companies. All right. Investors who use the bottom up method generally have a good understanding of the industry, as they expect that the company and the industry could perform well regardless of the state of the economy or even the sector itself. Investors often have a level of understanding of how the company being analyzed operates, hence why microeconomic factors are considered. By the way, microeconomic factors are a division of economics that studies the behavior of individuals and companies' interaction processes. Okay, so as an example, an investor may want to research a company in the telecommunications sector. The investor already understands the products and services that the company supplies before they delve deeper into the management and company financials. This is an advantage for investors because they have a reasonable expectation of how the company should perform in certain aspects of their business, as opposed to researching a company that they know nothing about. Okay, so bottom up investors generally invest for the longer term, where a buy and hold approach is implied or employed, should I say, to give the individual companies, a chance to fulfill an investor's expectations despite what is happening in the broader market. So once again, there are generally probably 3 stages of the analysis process with bottom up investing, and it's basically the opposite of the top down approach. Okay, so first, the company specific analysis. So like the top down approach, company specific analysis is carried out by using the fundamental metrics explained in the previous section, dealing with PE ratios, PB ratios, PS ratios, and DE ratios, with more emphasis placed on the individual research of the company. Investors look deeper into the company's organizational flow, right, management, and future forecasts to gain a more meaningful understanding of the company's prospects, okay, or its potential. A good understanding of the company's structural growth gives an investor an advantage when comparing it to similar companies that provide the same or similar products or services. This information is important to help make an assessment on whether the company is a good value proposition compared to its peers. Okay, and then of course the sector specific analysis. So stage 2 basically involves comparing the financials and metrics of companies where potential strengths and weaknesses in the company can be identified. If the company being researched is the Commonwealth Bank, an investor can compare its metrics with other major banks, right? Once the positive and negatives have been identified in the company, the next step is to compare the metrics with companies that are in the same sector but not necessarily like for like. Okay, if the company being researched is mining, it would be beneficial to research companies that supply mining companies with equipment and technology to see if the trajectory is in line. Logistical and export companies that provide a service for mining companies can be compared, as well as they can potentially offer information on how the industry is tracking as a whole. Okay, sector-specific analysis is carried out by using some of the financial metrics explained earlier, with the addition of technical analysis to help identify potential trends or weaknesses between comparable companies. Okay. And then there's our global and economic analysis, which is the final stage involving, it basically involves investors looking at macroeconomics to assess the state of their broader economy. Okay. So as an investor, or an investor is basically trying to identify where the global economy is placed in the economic cycle. Although not a lot of emphasis is placed on this data, it may give an investor more confidence that the company being researched has a positive market trend. Okay, this may give investors an opportunity to consider hedging strategies if the outlook is less optimistic. Okay, research in key areas of current and historical GDP, interest rates, unemployment rates are necessary as well. The important metrics will give an investor a bigger picture perspective, but won't necessarily make an investment decision earlier in the analysis process. Okay, so let's look at an example here. Let's see what a bottom-up analysis approach would look like in a case study. So we bring it back Shanae. Shanae is looking to add to her existing portfolio with an investment window of 10 to 12 years. There is no exposure to the telecommunications sector in Shanae's investments. And so she has heard that a company named Telly is currently a good buy. All right. Well, Shanae has been a customer of the company for a decade, and she noticed that the share price had fallen because of bad press the company had received. Right. So the company's specific analysis done by Shanae includes a PE ratio, PB ratio, PS ratio, DE ratio. Okay. Once Shanae has an idea of the basics of the company, she begins to work on their future forecasts to gain a better understanding of the company's growth prospects, okay, or growth potential. She thinks that the new 5G rollout will be good for the company. All right, so she's happy to move to the next stage of her analysis process because she has gained more confidence in the new rollout plans. Okay, now she wants to compare the main fundamental metrics with other telecommunication companies. Shanae understands that on average, the financials of the top three telecommunication companies in the US are pretty good. So she believes that the growth potential of the company is higher because of the fact that they are leading the charge for the 5G rollout, right? So she now compares the fundamentals of Tele with other companies in the telecommunications sector that are more product specific to get a gauge of how the sector is performing as a whole. Okay, the release of the new technology on a regular basis makes mobile focused companies better than the fixed line specific providers, right? Many of Tele's competitors are preparing for the rollout of 5G, which will be a good thing for the company as they control a large range of the 5G spectrum. Okay, so Shanae's happy about that the sector has good prospects for the future as it has a healthy distribution of both products and services. Okay, again, investors look at macroeconomics to assess the state of the economy. So Shanae is trying to figure out where the global economy is placed on the economic cycle. So although not a lot of emphasis is placed on this data, she is trying to identify how much of a stake she'll take in Tele, because if market conditions are good, she probably will take a larger position in that company. Okay, so the first thing Shanae does is research the GDP, inflation rate, federal funds rate, and the major economies' unemployment numbers. Okay, global GDP levels have been rising in line with market expectations. Inflation rates have risen in line with expectations in most of the major economies, and the federal funds rate has not changed in the last 6 months. Okay, the U.S. economy has moved in line with other major world economies over the last 3 quarters. The U.S.'s GDP has increased, and the inflation rate has started to increase as well. There has recently been a drop in the domestic unemployment rate, which exceeded expectations. Okay. Consumer spending figures are on the rise with a steady increase over the last 5 months, and consumer confidence levels are at yearly highs as well. Okay. Shanae concluded that the economy is in an expansion phase after conducting this research, right? After reviewing all the information or the available information, Shanae decides that Telly is currently undervalued and has good growth potential in the coming years. So there's 4 things here to note here. So one, Shanae has personally experienced poor services from Telly, which is why they have a long-standing history. So she thinks that the recent fall in share price may have just been overstated. Okay. Number 2, excuse me, Telly had more scope for growth than its peers because it controls a large part of the new 5G technology, but its financials presented mostly on par with its main competitors. Number 3, telecommunication companies that only focus on mobile distribution perform better than companies that provided fixed line services. It's well placed because it has a large representation of both products and services in its business model. Okay. And then finally, number 4, the global economic outlook is currently in an expansion phase, according to Shanae. A growing economy will bode well for new technology and communication space, as well as the need for more products and services, right? Because the economy is expanding, right? More people are buying. These factors are great for the communication sectors as a whole. All right. So this process has basically given Shanae a good chance of success as she's buying a long-term stake in a company which has better growth potential than its peers. So she decides to take a big position in Telly because of the current market conditions and the fact that the investment window is a great position on the economic cycle. Okay, so this finishes off our final section, the free money English fundamental analysis portion. Next, we will enter the income generating strategies portion, where we teach you how traders and investors can glitch the money from a share portfolio by using a combination of long and short-term investment methods. So this is Bradley Barnett. I love y'all. From yours truly, Financial 4.